A generation that is growing with AI or that will go with AI will feel very comfortable to discuss their own wealth with AI. In short order, it's not going to take a long time. These AIs will be as smart as your grand investors.
Hello and welcome to this week's Tea Break. I'm Al-Enazi and as always, I'm here with my co-host Yuri. Today, we're thrilled to be joined by Giuseppe Sette, co-founder of Reflexivity, which offers an AI toolbox for the investment industry. Giuseppe, how are you?
Very good, thanks. Love to be here. Thanks for having me. I've gone for the FT's own brand of coffee, which I'm starting to explore. It's very interesting. It's fairly clear that there is a straight line between your GDP per capita and how much coffee you drink. Straight, perfect correlation fit. And tea is kind of a little bit more fuzzy. But you will certainly discover that even in countries that are stereotypically tea drinkers, like the UK, we consume 4 times more coffee kilograms per head than tea. I don't think I can really draw a conclusion on whether it makes you more productive or not, but we're certainly drinking more coffee the more money we have in our pockets.
Interesting observations, Giuseppe, and there's a very serious point here as well, because the tea and coffee plantations, even to this day, there's accusations of modern slavery.
Well, I looked at the modern slavery benchmark devised by asset manager CCLA, and many household names have performed badly. Many Chinese banks proving to be particularly, opaque and supplying very little information about their supply chains. It seems like many people are not taking it seriously. Will we still see exploitation of labor in the world where AI methods, dominate manufacturing, production and distribution?
Economic incentives will make it easier to just choose. That is much more effective to have a robot to deal with logistics rather than a cohort of humans. Much easier from a social point of view, much more presentable, gives you less problems with your diplomatic counterparts. We should remember that the same learning methodologies that have given us the LLMs that we use today on GPT, etc., will give us functioning hands in short order.
I was speaking with Beat Whitman, who had a very senior role at UBS, at Clarendon Lou, at Julius Baer as well. Yeah. So really one of the glitterati of the Swiss private banking world. And he's running Porter Advisors now, who work with many wealthy families. And since that Trump succession to the White House, the J.D. Vance notorious speech at the Munich Security Conference, he's seeing a real configuration of asset allocation. And particularly all the families are saying, we want to invest more in this newly resurgent Europe. Are you, Giuseppe, seeing any increased faith in continental European investments?
No doubt, because the catalyst is extremely apparent, insofar as government spending being ratcheting up at incredible speed. There is an ongoing fear about real risks of geopolitical tensions escalating in the border between us and the Eastern powers. In addition to that, if you look at European equities, any AI and investment manager will tell you they are so incredibly cheap compared to their American counterparts. So the cases are compounding for investment. There is, however, one flip side, and we get a Russian soldier's foot in NATO territory. I think that European equities might look less attractive. And as you can expect, flight to quality will always go to the usual suspects: the dollar, gold, treasuries, American equities.
One of our viewers, Nana Araba Aban, VP Executive Consumer Banking at EcoBank Transnational in Togo, asks you, Giuseppe, Africa is a huge continent. It is being ignored by many wealth and investment managers. What does your data say about Africa? What trends are you seeing in sub-Saharan Africa in the growth and uptake, of wealth management?
They have been the permanently emerging market that always promised but yet failed to deliver to this date. And we might be seeing a moment of inflection. What we observe as of today is financial infrastructure being finally built at record speed. Floater wave, OPay, whether you need to pay, you need to source talent and what have you. With energy, you can get water. and with water, you can transform Africa. You can also get out of the curse of oil that some of those countries have suffered for the longest time. And so things might really be ready for a change there.
And the demographics are obviously key to any investment, and you've been looking at this whole $100 trillion wealth transfer, Ali, between generations and the role which AI will play in that. What have you been finding?
Well, I saw the recent Ernst & Young research. 43% of wealthy investors trust AI alone for financial planning. Our commentators say stockpicking is one area where clients are totally happy in deferring the entire activity to algorithms. And Giuseppe, how do you see the landscape developing here? Will investments soon be totally handled by AI, or will the more emotional aspects of wealth management necessitate human intervention?
A generation that is growing with AI or that will go with AI will feel very comfortable to discuss their own wealth with AI. In short order, it's not going to take a long time. These AIs will be as smart as your grand investors, because they will have studied much more investment cases. They will access much more data than any human can. So they will sit next to you and they will help you and guide you with humility, with directness, with transparency, and you will trust them for that, and you will feel more comfortable taking the wheel of your portfolio.
Well, in times of turmoil, the assets, they do continue to flow to the big names, the likes of UBS, HSBC. But we put this question to Hugh Elwes at Stevens, and he was saying that one of the really big catalysts for transformation is the interest in private markets and how these are integrated with traditional investments. And he also predicts the continuation in the cycle of spinouts, of teams coming from large players and setting up on their own. And I know that's something you're very familiar with, Giuseppe. You worked with a major player like Lombard Odier. Why did you and your colleagues feel it's time to break away and set up our own operation?
In our case, there was a very clear focus on technology. I think the development of technology sits outside of the premises of an investment management house. In terms of investment management proper, I think it's a toss of the coin whether it's better to leave or to stay. We had a fantastic experience in Lombard Odier. It's a very nurturing environment for investment teams. And a lot of spinouts do face the complications that are about fundraising, about managing your administration, which are all not a problem anymore if you sit within the confines of a proper larger institutions, which is why you've seen the multi-manager model that many of the large hedge funds have championed in the last decade be so successful. Talent and fundraising put together under the same roof.
What sort of jobs do you recommend the children and grandchildren of our viewers would be preparing for? Should they be training to be advisors and wealth managers, or do you have other suggestions out there?
I think that the advice you find now in the media as broad consensus is completely wrong. They will tell you to lean on the strengths of you as a human, empathy, interconnection, creativity, and it feels, as we would say in the investment management business, like driving in the rearview mirror. Human connection, we've seen people that can really build emotional connections and open up to AI to the point of addiction. We've seen AI capable of doing, to a degree, creative work. I think that truly it's not a matter of skill. Sooner or later, AI will come for some skills in which we think we have our own expertise. It will be a matter instead of what we will not trust the AI to do for us. And think about jobs where the risk of failure is too high to trust a new technology. Maybe you might be able to get a prescription from a doctor, but you might be much more reluctant to have open heart surgery with an AI robot. Think about the armed forces at large. Surely we will employ drones and whatever else, but we will always want to have a human there to press the red button and stop things. There's going to be a complete rethinking of what is a good career in the post-AI world. And that career will be based on what we will not trust the AI to do for us.
So I think it's a bit too late for me with my sons because they've already decided what they want to do. But Ali, good advice for you when you raise your family.
Yeah, definitely. I'm going to be taking that on board. Thank you so much for joining us.
Thank you, it's been a pleasure.
That's it from us for now. Don't forget to catch our weekly episodes on the PWM website or our YouTube channel. And if you've got questions for our guests or just want to dive deeper, you'll find everything you need online. See you next week.